Hello fellow traders, on this video I want to go through a very important rule. This is a core rule for supply and demand set and forget community. And it deals with the validity of our potential imbalance. We have two rules, and these you should know by heart because they are very powerful. A potential imbalance becomes a confirmed imbalance. There are different things. Potential imbalance needs these two things, one, two, both. Okay? One, two, the option one, option two, or both at the same time. Okay? So if both are okay, both rules are complied at the same time, the level is even more powerful. So a potential imbalance becomes a confirmed imbalance when it takes out opposing zone in the same time frame it's been located. We are always talking about the same time frame. We don't take into account other time frames to assess if a potential imbalance is valid or not. Each time frame is independent from any other time frame. They are individual entities. Secondly, a potential imbalance becomes confirmed if it breaks the trend line in the same time frame it's been located. And that is what we call wow, but only valid if it is nested within higher time frame, flip zone, 20 MA confluence, trend line confluence, etc. You have to read a wow lesson. Okay, so that's a potential imbalance confirmation. But a very important thing, a potential imbalance, the validity of a zone is independent from its tradability. And that means that we need a top-down analysis in order to assess opposing higher time frame zones and the curve before making a decision. So we need to make a top-down analysis. If our combination is a monthly, weekly, daily, then we have to analyze all that and make a trading decision. We will have a bias, shorts, longs, or nothing. Okay, so if you are using the weekly, daily 4 hour, or daily 4 hour, 30 minute, 1 hour, whatever you're using, then you have to make the top analysis because a zone is a zone, but this is only tradable if it goes with your trading plan, with the bias that you have decided to take. Okay, so think of the other zones are the opposing zones that are not valid as the areas. These new trades zones have been validated as areas that will probably give you the needed pullback to your entry in the direction of the trend and your trading plan bias. So having said that, let's start doing this. We're going to use $CAD. We are going to start with monthly, weekly, and daily. This video is going to take a little bit longer than 10 minutes, but you will see the power of all this. So we are going to use only rectangles and trend lines, and we're going to start from here probably, and then we'll continue and see what happens. We can go also backwards. We'll do it backwards on daily or weekly. So let's start. So we have always to connect two valid peaks or valid valleys, last two, okay, and or 3 CPs, consecutive CPs for aggressive trend line. Okay, if it is not a clear CP, clear value of peak, consider it a CP. That's the easiest way to consider all this. Okay, so we're going to start up there, for example, which is what we see on the chart. Okay, one sec. Okay, I didn't have the shortcut indicator. So here, this is what we have. Okay, previous trend line. So if that is a trend line, then we have a area of demand. Okay, then we have another trend line there that was one test, two tests, three tests. We go and take the latest two always, and then when that happens, okay, this is what we have, the area of supply. Okay, that could probably be on the depends on, yeah, could probably be on the weekly, but not on the monthly. So this is what we have. Price drops. Okay, so a trend line break creates a new area of supply, while short in this case. Here we have another trend line break, so we have another zone. Okay, so here we just have nothing. To the left, well, we're gonna stop there. Okay, so we're going down, down, down. So if these areas taken out, rules say that we have to go higher in price and see what caused the break of this trend line. If a peak of this zone if a peak or a CP, that was a pause right there. So that one is an area of supply. Right? This is what we have. This one we remove it. So here we have now two peaks and opposing areas of demand being removed. We have a downtrend officially. So we have now this flip zone out. So here we have another imbalance and then drops. We would have to look left. As you can see, these areas have been taken out. Okay. Oops. So now that we have this, okay, we have two new peaks. This is a trend line. Okay. That's a valid trend line. And we continue to drop. So here we have this. Okay. So this is demand. It's been taken out. Okay. But which level? That one. Okay. And then at the origin of the zone, it is that one. So demand. But here, this is what we have here. The validity of a zone is independent from its tradability. We need to do a top-down analysis. So we are in a bigger picture downtrend, etc., etc. So taking while longs require at least for a counter trend to take out an opposing area, as the while longs say, unless we have 3 months or 6 months area of demand here, but we don't know, and we're not going to enter into that. It's too much. Okay, we're just drawing zones. So we have descending trend line broken. We have an imbalance, but this imbalance has to be evaluated, okay, and assessed with the bigger picture trend. We have rally into 20 EMA, new area of supply taken out. So supply with a downtrend is stronger than a brand new area of demand that did not take up supply, 20 EMA in control, and the bigger picture down. Okay, so that's not a good idea. Okay, so here we have confluence with 20 EMA, tradability of that level. Well, that's another thing, the entry, where we would enter. So now we have there that one, out, out. So here we have a CP, one CP and nothing. So we connect now these two. Okay, still peaks. So we continue to drop new areas of supply. Here to the left, probably we don't have anything here to the left. So those are all-time lows and validated automatically, as you know, because there's nothing to be taken out. So here, this is what we have. A new updated trend line from there to there. Brand new area of demand because it breaks, but all-time lows. Why do you want to take along there at all-time lows? There's nothing here to the left. Okay, so that one area is taken out. So we have another level there. That's trend line. Okay, so this is what we have. Another area there, CP. That was not, after a strong drop in price, wasn't respected, and then it's taken out. Okay, so that were trades here, probably for sure there on the daily probably, and then it dropped like that's a lot of pips. Okay, so that area is taken out. So if that area is taken out, there must be something that took it out. Okay, so we have an opposing area. We have automatically we have these at the bottom. Okay, very wide, but this is the origin of the whole move. Okay, but very wide and all that. We need confirmation there. Then we have these little area there, this high wave candle there. That was the one that caused the break of this area of supply. Okay, these two are connected, and then we have another zone there. Okay, but this one is high wave candle doji. We don't take that as set and forget. We have to wait for confirmation. It was overshot. Rules say high wave candle, single doji, lower odds, and all that. So price dropped, and one sec. So this is what we have. Now it rallies, it takes out an area supply, and then price retraces that CP there. This is probably 1 to 6 months area of supply, and then price drops and creates this. It removes this area of demand, so we have supply. So let me do that. You have supply because it takes out an opposing area of demand. This is demand, all this, because it took out this one and this one. So this must be supply. This was, okay, supply. This also is supply, very wide, because it was the original area that caused the break of this. Very, very wide. And this is an inherited area. Okay, but both are supply. So now we start having here, here this is what we have, drops, rally, 1, 2, 3, okay? So an aggressive trend line, and then after that, let me remove this one, we have this one, okay? While long with this is probably a 6 months area of demand and probably 3 months while long as well. So brand new area while long supported by a high time frame area of demand. This is a 6 months by number of candles. I took out 1, 2, tested 3, okay, 3 areas of supply, very powerful. So now price drops and creates a new area of demand. And now the trend line is, once we make 2 new valleys, okay, we have a new valley here, but this one doesn't make a higher high than the second leg, so that's not a good one. So we have another one there, it doesn't make a higher high, but then we have this, and then this. We have a W there, and makes a higher high than the second leg of the first valley. So once we see that, then we are able to connect that. Okay, so we create new areas, 20 EMA now, breaking higher. So if this is, okay, this is the descending trend line there as well. Then once broken, then we create demand. Bouncing of 6, okay, of 6 and 3 months while long, and then it goes higher. Then it breaks this area. That was the cause of all the break of all this. Okay, that one drawn, another one there. It was tested here. See that one very wide. Okay, so this one here are connected. These two with this taken out. So when that is taken out, then we create what? We create these little CP there. I remember very well that CP. We took trades there, a lot of trades. So, and then we rally, and we remove that area over there. And what does it? It removes it. It removes these CP 1, 2, 3 white horses. Okay, so we have like the one at the top is the one that caused the final break of this area over there. So now, since we have this area there that was supply, as we saw before, we removed this one area and all that. Now it's taken out, so there must be something that took it out. That one. So now we go like that, and we create. I'm going to take the whole thing, okay, and we should be updating the trend line to the latest 2 valleys. And guys, this is how it works. That's how it works. You don't need any indicator, you don't need anything else but reading price action and the levels and the imbalances, what causes the break of an imbalance, okay, and all that. It has to take out an opposing area or break a trend line. Those are the 2 rules. But you then need to analyze the bigger picture and all that. We're just taking a look at the monthly. Okay, so it's more difficult. So this is an area of supply getting close, okay, and then higher is a 3 months area, 6 months area of supply, getting higher in the curve for that one. So this is on the monthly. So, but let's do it on the weekly as well, okay, and see what happens over there. So let's go back a little bit, like here, because that was here, like there. So we have several, okay, and peak, drop, CP. So we connect latest 2. So this is what we have. Sorry, that one. So that candle over there closes above, open high, low, and close, and creates while long. Overshot, but while long, nevertheless. So it was within that all-time low. That was a 3 months, a monthly area of demand, and all that, I think. Yeah. So overshot, but no problem. If you take Our daily area of demand there is a loss, but that's not a problem. Okay, losses might exist. So now we go higher and we break this area of supply that was tested there, so we create demand. Okay, so it breaks higher, and now we have a pause there, and then a drop, and then rallies. So we have an ascending trend line. Okay, if there's a ascending trend line over there, right there. So we have all these areas there holding. Probably this will be a monthly or something like that. 3 months. Let me see. Let me use the vertical line to see the tradability of that area. And then let me see horizontal line. Let cross and then go one time frame higher. There it is. See? Monthly area supply, 3 months area supply. So price is now very high. The original drop, the peak is a CP, CP, CP. So it goes to the peak and then retraces all the way down. So this is what I'm talking about, the tradability of the levels. You have to assess top-down analysis because the realignment was playing out over there. The inertia was to go down. So because we are in a bigger picture downtrend, this is just a monthly while long and play it out there, and then try the bigger time frames will still react to it until it's weakened, opposing area supply is weakened, and then it's taken out. So this is what we have in the weekly now. And let me remove this vertical and horizontal lines. So and now we have this area there, okay, that took out this there, took out all this. So this is demand, strong demand. So there it is, no close on the trend line, and then price rallies and retraces all the way up into monthly area supply. Too high, we have to wait. This has been retested already, so not good. And then price, now we have one peak, another peak, but we need to make a lower low. That doesn't happen. Another peak, and then now we have that. Okay, so this is their peak with peak. Okay, these two peaks, and then this is what we have. Still, this zone is holding. Okay, then the upper zone was there. So that one is holding, and then it breaks. It's broken. These areas are tested. Okay, tested, tested. Everything's tested. So here we have supply and control. One sec. I'm trying to delete all this. Sometimes it gets difficult. So this is way high over there. 3 months monthly area supply. So taking this one is not a good idea. Okay, but this one pre-CP, yes, it's got a lot of room. Once it breaks above the 20 MA, first retest, second retest is good. The first one is not good. As per the rules. So now this was not tradable. Low in the curve, price falls short of getting there. So now we have the aggressive trail line because we have several CPs all the way down. Okay, so we connect trail line, and then this is a new level created but not a good one, and then we've got another one area. As you can see, depending on how you draw it, when it is a single layer, single candle, you can draw it lower, wider, and then now you have that, and then you continue. Now this is what we have. Okay, so now we have ascending trail line there. When it makes a higher high, brand new level there, brand new level there, and this is another level, and we have tested, tested, almost tested, 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 1, 2, 3, 4, 5 times. Very, very weak. And probably here we have a monthly area of demand. Let me take a look here and see what happens. So we have on potential area of demand, wow, or something like that. We are there, exactly. There it is. Trail line break, wow long on the monthly. So that was tradable. Okay, because the monthly is used up. So this is what I'm saying always with this. I'm doing it very quick, okay? And because I have it very clear in my mind, but you can pause the video and all that, but you will see the validity of the zone is depending from its tradability. We need to make top-down analysis and assess opposing high time frame zones and the curve before making any decision. So if the curve is used up and you have brand new wow longs against it, it's time to be aggressive. Okay, so let's continue and let's clean all this up a little bit. Okay, so the only thing I want to do is to take what's this one? This is the monthly area. Okay, so weekly. So now this is what we have: monthly area supply taken out. Okay, and this is what we have. The ascending trend line is broken, but you say, oh, no problem. I can't trade that one. Why? Because the trend line is broken and we have a downtrend now. So I can't trade this. Yes, you can. Why? Because rules say that if the trend line is broken on one time frame, weekly, and the bigger time frame, monthly, okay, is in an uptrend, then the nested level within the monthly will be valid. There's a weekly area, but do we have a monthly area of demand there? Let's go and check it out. Vertical line, the B, monthly. What do you think happened there? This is the level that caused the break of this level, tested twice. So this is what we have. Okay, so this is a valid area of demand because of all that. This is obviously now seen in hindsight, but you can check the community, and this was all covered at the moment. This monthly area of demand, longs there, and all that. Okay, so this is an area of demand on the monthly, and now on the monthly we are up, like we said before. So on the weekly we have that entry on the weekly, and you see confluence with the trend line and all that, 20 EMA, a very, very strong and powerful level. So here, this is what we have. Okay, price drop there. Oops, sorry. Let me remove this. So we have now this. This is an intraline. Okay, this is an intraline, and then we have price rally based rallies, and this is a pre-CP. Wow, but that's something else. Okay, now we have another thing, potential level there, but it didn't consolidate away, waiting for confirmation there. And then we break higher than the high, and then break pre-CPs, 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 and all that, but that's another thing. Okay, so another lesson. And then we have the ascending trend line there. So this monthly area takes control. We have a peak only there, so we just can't do this. This is nothing. This is not a peak. So we have that potential area, and then price breaks above that area, this area over there, and creates. This is not supply, remember. So this is a brand new area over there. So if we look left here, probably there was the monthly area supply. There it is. So the top of it was right there. So this area there is the one holding the weekly area supply that took out a monthly area of, well, it was this one that caused the movement, very powerful. Took out this thing, which is not supply, but there was this retest of monthly area of supply. So it's a very powerful level, confluence with the trend line and all that, and now 20 EMA with these wiki areas there, which is a monthly pre-CP long that could play out. It played out, but it didn't work. Okay, sorry. So if this is taken out, then we will have an area of supply. And this is how it works, guys. This is how it works. You have to be able to, it looks easy, but it requires a lot of experience to detect correct values, EPs, and all that, aggressive trend lines, but this is how it works for all time frames. So remember, each time frame is an independent entity. It does not relate with any other time frame unless you have done the analysis for the 3 time frames that you use in the combination for your trading plan, and then you have to assess. You start to connect both time frames to apply the realignment rule and the WOW rules, and that's how it works. Nothing else. Hope that is clear for you. If you have any doubts, don't hesitate and contact us in the community. We'll be glad to help. Have a great morning. Bye-bye.